Welcome back to the final hour. It is 3 p.m. on the 30th. Happy end of month, happy end of quarter. Let's say goodbye to September as we wrap up here for the final hour. Just post a little update in my Telegram channel. A little daily profit play performance, 17 out of 20 winning days, 26 out of last 30 winning trades. Nice little recap for the week. Nice profits overall. A couple of bonus trades sprinkled in. I think we actually are 4 for 4 on bonus plays. So we're close to, let me see that number again. Be about 30 out of 34 winning trades in the last month. So not too shabby. Pulling some profits today as well out of ES. I should have a trade on E-mini futures. Did a bear call spread up here near 6,000. Have a trade running right here on this account for a full profit. Where are we at? We should be going to this direction. Where's my real price at? Here it is. Price is right here at 57.80. I've got a profit trap on the broken wing butterfly. Should be in full profit. I don't really have to do anything. I can let it cash settle by the end of the day. This closeout should be good for, I'm seeing about 5 cents extra credit right now. I put in an order at 25 cents credit to see if I got any of the profit trap. If it expires today and I just get my full 275, that's fine too. I can just settle. So yes, I added some hedges. I put in some new trades today. I posted this in my Discord. ES should be full profit today. Profit on SPX this morning. Added some new trades. On SPY QQQ, I added a hedge in NVIDIA. I took a small loss from my October 4th expiration on NVIDIA. I added a hedge with MES, which is micro E-mini futures. I already have a hedge running on MNQ. I'm going out through the election to November 15th. We have earnings season kicking off in just a week or so. This week, we're getting through non-farm payroll, which is Friday. Some of the big numbers I'm looking at. Big numbers I'm looking at for this week would be your non-farm payroll numbers on Friday. Let's go 1 week back. So tomorrow, we did have some comments out of Powell today. It pretty much sounded exactly like an FOMC meeting, just some of the highlights. They're watching inflation data is trending the right direction. They believe that the economy is healthy enough to see that rate cuts will be helping stabilize employment. And they're going to continue to watch data points and month by month because the next rate decision is going to be November 7th, and there's still going to be some data that comes in for them to ultimately make their decision. But the market still anticipates additional cuts for the rest of the year. Here is November, 25 basis points expected for November, which is going to be 2 days after the election, and December anywhere from 25 to 50 basis points. So I think it's pretty safe to say we have at least another 50 basis points of cuts coming, which will bring the Fed down 1% from the highs. So we had a 5.25, 5.5, brings them down to 4.25, 4.5. Let's take a look and see if any of the metrics really change here on my watch list. So if we go to the 10 and the 2 year, you can see that the yield prices are actually up right now. Bond prices are actually lower. So I think that's, one thing that's throwing off traders is, yields should be going down and bond prices should be going up because they're inversely correlated. That's true, but the bond market actually priced in the short end of the curve very aggressively. And here we are looking at the 10 and the 2 year inverted by about 20 basis points. The 30-year mortgage has dipped from 6.7, highs around 7.83 when you go back to October of last year, all the way down to 6.08. Hopefully there's some additional softening in the 30-year mortgage. The 15-year is sitting around 5.16. The 1-year adjustable is up actually to 6.06, hasn't really adjusted. So, anyone in the housing market, we've seen some refis and some activity there, which is good and what's expected. And hopefully by the end of the year, you'll continue to see good things in the real estate market, which has helped the balance sheets of the consumers in the U.S., which ultimately will lead to probably steady consumption, which is what drives 70% of the U.S. economy. So anyway, stocks for today. Let's go to the advanced decline. Let's take a look at the heat map, and let's see how things are shaping up for today. So right now we have about 62% of stocks declining, 34.8% advancing. You can see some red here in the heat map. Some notables: Nvidia down 1.14%, Apple up 1.74%. Semiconductors as a whole doing pretty poorly. Micron, you son of a gun. I needed Micron to get back below 106 by Friday last week. Didn't play out. I should have gone out to an extra freaking week. Darn it. I had a feeling that was I needed to go out further. Oh well. Micron, it's back where I needed it to be. I needed it to be below 106, and we're back below 103. So my 650 credit, I'm actually curious if I can pull up that trade and see what it'd be trading for right now. Micron. Now the trade's done. I was going to look and see if I could just go similar and recalibrate the trade, but I cannot. No big deal. All right. So Micron down. What are the semiconductors? Intel down 2.38%. Mag 7's hanging in there. Let's say chips are down, Apple's up, Google's up, Meta's up, flat, but 0.4, 0.33% respectively. Amazon's down just shy of 1%. We have Eli Lilly up fractionally, ABBV up fractionally. I have a trade on ABBV as well. Johnson & Johnson, I'm long. Energy up a little bit, not too bad. Walmart up a little bit, it's fine. All right, so let's go back to the homepage here. And feel free to drop a line in the chat. Say hi, say happy Monday. And the final hour session, we're doing this virtually every day, Monday through Friday, 3 p.m. Eastern time. So spread the word. Alrighty, SPY. On the day, 0.15% to the downside in this final hour. Q's down 0.33%. DIA, the Dow, down 0.43. The Russell was up on the day, has faded most of that move. It's down 0.17. Volatility has spiked up a little bit, slightly. The day hasn't moved a ton. Really, we saw more of an uptick in volatility on Friday the 27th than we did today. A little bit of indecision on the day overall. Do we have another, a little bit of a scare, a little bit of volatility rally over the next maybe 30 to 45 days? Within 45 days, we're getting to the election, right? If we look at an expiration cycle for an index or even weekly options, we do have some expirations available going right into the election. November 1st is pre, November 8th is Friday, Monday is the 5th. That's going to be, should be, right? Sunday, Monday. Let's go to October. The 5th is on a Tuesday. So the 4th through the 8th, 5th is Tuesday. I wonder, so the CME Watch Tool shows the November 7th meeting. So they're not doing a Wednesday, they're doing a Thursday. And I don't know if that's because of the election. I'm not really sure. But that's what the calendar shows for the next rate decision. What else? And how many days out is that? If we go to the election is within 40 days. We're talking about 36 days or so. I had an interesting screenshot that I want to share with everybody this morning. S&P election year seasonality pattern. This goes back to 1949. You can see here that the average move during an election season is up, right? Average move is up. So if we have all election years, and I'll just say, let's just forget about Trump versus Harris. Okay, there's been some election drama with Biden dropping out. Trump dodging lawsuits left and right. Kamala Harris getting nominated without a primary. It's certainly a different election. But at the end of the day, if the market sees gridlock between the House, the Senate, and the president, most likely we feel. I mean, it feels like we grow less and less bipartisan and more and more polarized, and so therefore gridlock is probably good for the market. So most election years are positive. Sitting president running, still positive. If that sitting president is likely going to get reelected, obviously that's not the case this year. It's an interesting spot because maybe this is the administration that gets reelected if the Democrats win, but who knows? So to the downside, if it's open field, going back, 72 years, you can't say, I mean, how many elections have we had where it hasn't been an incumbent that's running? How many elections have we had where it's been two totally new candidates? I mean, we essentially have a president that's already been president, and we have a vice president that's now getting the nod to run for president. So, I mean, in a way, it's like the markets kind of know what we're going to get with one win or the other. I just think the biggest obstacle, or maybe the biggest like outlier event for the election as far as causing drama, would be if it's all Republicans that win. So we have like Republican House Senate president, or we have a Republican, or I'm sorry, Democratic House Senate president. I think the sweep would be more of the disruption to the market, where there's a lot more drama involved, as opposed to, Democratic president split Congress, no big deal. Republican president split Congress, no big deal. It just means that policy shift and changes will be hard to come by, and the market continues to just do its thing. So we also have the Fed cutting rates. If the Fed continues to see improved data, that's a good thing. But what I notice here is, even through, I mean, let's just say that, most of the time we're going up, and that's expected. The market's already a positive drift environment anyway. But what I wanted to draw your attention to is right here. Look at October to November. In an election year, sideways, slightly down, right? So are we able to carve out all-time highs or new highs going into this election? Part of me thinks even with earnings season, we're probably not going to see, crazy all-time highs. I would say until most likely after the election. So just to play a little bit of downside, I did add some hedges this week. I added in an MES hedge right here, which is a micro E-mini futures. So I added in a 5680. So that's a 5680 long put and a 5670 long put. I paid about $170 for those. So that debit is like my max risk, if I'm wrong, is going to be around, I don't know, I think it was going to be upside down about $600. Let me double check here. So this is an MES hedge, 175. So my max risk is about $878. If I'm right on the trade, I can turn this max risk into maybe a $1,500 to $2,000 profit. If we have a bigger sell-off level, which I do want to note here, if we come down back down to this FOMC low, that's 5681. I'm going to go ahead and set a chart alarm here, and let me make sure that is the FOMC low. That's a 5675. I'll go 5680. So 5680, 5680. And check MES P&L for hedge, just to give myself a little heads up if we fall into that level. Also looking at just a simple 200 moving average. Watching this on a couple of different instruments. If we're sitting here just barely eking out these all-time highs, is this market able to do something like this? We have highs here. We have highs here, right? Maybe some downward pressure, comes in to test this trend line, then starts to go higher. We just have this like slow grind through the election. We possibly blow the tops off, or we roll over and things get a little bit uglier going into the end of the year. I don't know. But I will, be willing to play both sides or whatever I think is best. In this current environment, I think a lot of things in the U.S. are priced to perfection. We've seen a big rally in China stocks, mainly the ones that I've been talking about for a year. We did have some notable pullbacks today, which is honestly, to me, it's totally fine. I still like the measure moves to the upside. I don't know if the market's immediately looking to try to fade this, or if this is just offering a chance to, buy the dip. I did say this. I think that bull flags are really important to see here if we're going to see bulls sustain the rally. So having this rip, having this pause certainly looks a lot better for another leg higher, as opposed to having the rip and having the fade pull back to essentially where it started. So I don't know what's going to happen if China stocks are going to continue to dump lower. But after a move today, it's like we're up. I mean, we were up like 20+% on some of these stocks. Some of them made even bigger moves than that. Let's just start from this last little swing low. This is Alibaba, and this move was up around 40%. My gosh. Let's go to the weekly time frame here. I mean, over the last 3 weeks of trading, not counting today, just the last 3 weeks of trading, we had a move about 36.3% on Alibaba. It's interesting here on the weekly chart, we came right back to the 200 EMA. You look at a daily time frame, we're actually well above it. So what I do like about the stock as far as the daily time frame is, because we have a low and we have higher lows, we're making higher high, higher low, higher high. I'm looking for a higher low and then a continuation up to at least get to this level. I've got some measure moves up here. So for me, I'm still long in Alibaba. I'm still long Baidu. I'm still long JW or a JD, FXI, KWeb, and I'm looking to ride these out for either one, profit targets get hit on my charts, or two, some dollar amounts as far as a percentage that I can close out and capture. But um, I'm looking to basically be in China stocks long for the next 1 to 3 months. I say one because if we keep running here through or pre-election, then maybe these trades are essentially done. I don't really need to hold them any longer. But if we are going to, rip through these levels, then I'm probably just going to start moving trailing stop losses, something along those lines. Okay. Francois says, are your gamma readings giving you any 2 or 3 day trades out of SPY? I mean, my gamma levels are essentially giving me a high probability direction for the week. Sometimes it lasts for the day. Sometimes it's a notable spot, like when I called out the. I mean, if you're in my, are you in my daily profit play, Francois? Are you in there? Because if you are, we've seen some live sessions where I see it on a Wednesday, I line it up, and I'll go out 2 to 3 days to call the trade, give price a chance to move. But we have this combination of open interest and gamma levels and order flows and hedging levels, and all these things add up to a nice strike price that I'd like to see price get to, and more often than not, to see it get there. So I don't necessarily have to go out. I don't like zero DT, to be honest. Other than trading and selling options, I don't love zero DTE. And the reason why is it's hyper price sensitive. You can overpay for options and you're taking on usually 5 to 10 times the risk in a zero DT environment. So I'm very meticulous about how I take the trades. I'm very aggressive on when I take my profit, as illustrated with my daily profit class. I mean, we have had a pretty good month so far. 17 out of the 20 days for the month have been profitable. 26 out of the last 30 trades, or like I said, with some of the bonus trades, were like 30 for 34. Not too bad. And all that is just a little simple daily routine that we do. Okay. So I'm not sure what your question is outside of, does it give us 2 to 3 days? I mean, it gives us the order flows in real time. So what have I called? I've called a trade that if I see it on a Monday, I'll go out to a Friday and buy myself the week and let price hit that level. And I typically see, I mean, I think our smallest profit was about 75% return on capital for some of those gamma levels on the SPY, and our largest was just over 100%. So, I mean, that's what I expect. I certainly like those, 50% take profits or 100+% take profits are great. But I'm willing to pay a little bit more for the time just because I know that the zero DT can be hit and miss. If I pay for it today, it's cheap, but obviously, if I'm wrong, I'm wrong, and there's no backup plan. So I typically like to go out, at least a couple of days and give myself a chance for these prices to get hit. Okay, all right. So U.S. indexes are down a little bit. I just want to take a quick glance at these China stocks. So Alibaba's pulling back a little bit. Baidu also pulling back a little bit. Nice to see a couple of days closing above the 200 EMA on the daily time frame. We also made a low to a higher low and a low high lower low. I'm sorry, low to high, higher low to higher high. I'm just liking the structure. I mean, we're turning the corner in here. If we're making this a move and we pull back into the 200 EMA or pull back into the backside of this trend line to the wedge test, then I'm looking to see if we get more upside pressure. Give it 30 days, give it 45 days, give it 60 days, give it till the end of the year. I don't know if China stocks are going to go up 30%, pause, and go up another 30%. I think a lot of traders that are looking to get involved here are either in and buying the highs, and they're going to get shaken out and rattled, maybe a little bit with some type of pause or pullback. But I'd say the bigger gain would be if we see more upside. There's some dips and some levels to be continuing to follow along with. But I know everyone's skeptical, right? Everyone was saying China's uninvestable. Everyone's skeptical. Don't believe it. You can't trust it. I get it. I get it. And I realize that the stocks that I'm in have risk, but they're also large China stocks. I don't see them getting delisted in the next 1 to 3 months. I see that a trade is just a trade. It's a little bit of portfolio allocation, and hopefully there's good upside potential where the reward is worth it, and that's all I can hope for. Okay. Most, if not all, of your trades in the daily profit play calls puts on indexes, or do they involve options? The daily profit play is an option strategy. Yep. We're trading options. I'm usually always trading options. I mean, if I had my choice, I would never own a stock. I would just trade options. The only reason I trade and I own stock is because if I worry about the time factor, I just own stocks. Right? It'd be the same thing as, do you want to buy the SPY and hope you get the timing right, or you just want to buy the SPY and hold it for an instrument that's gone up for 90 years, through everything that we've ever encountered as a country in advanced financial markets. It just keeps getting more and more modern, more smart, more liquid, more tools. It's positive drift for a reason, and the cream rises to the crop or the top. I mean, we've had literally 10 stocks in the Nasdaq. The Nasdaq 100 is still driven by 10 stocks. The S&P has been driven by 10 stocks. Now, recently, the market breadth has widened out, which has been a nice thing to see. I don't know if I can show that here on the chart, market breadth. If not, I can probably find it. If I can't find it there, see if I can go S&P total breadth. If not, no big deal. Let me see if I can find a S&P market breadth indicator. Let's see, 200-day index. No. I mean, I guess it's like the quick glance is this. I mean, advanced decline. How many stocks are above the 50 moving average? This to me is a good example of market breadth. If I can't find the exact number, the market breadth has been increasing. Certainly a lot better than the top 10 carrying the way. But right here we have 71% of stocks are still above their 50 simple moving average, and 68% of stocks are still above their 200 simple moving average. So right there, from a stance of market breadth, we have most of the stocks in what would be an industry standard buy zone. If you're above the 50 and you're above the 100 and you're above the 200, that is seen as a tried and true uptrend, and you look to stay with it. So for the most part right now, I'd say the market is probably going to be buying the dip. I'd say that's a pretty powerful tool. It has been. I mean, my gosh, we saw a crazy buy the dip on August 5th. We saw a crazy buy the dip post Labor Day. And I do wonder if we have a bit of a pullback. Is it going to be another higher low and then another buy the dip? And this starts to look very close to some type of rising wedge pattern. And if that is the case, fine. There's still room to drift higher. And I'm telling you, though, don't call the top on something like this. Because if this is some type of what looks to be a perfect rising wedge, and I'm going to short the heck out of this market and it's dropping all the way back down here, I've seen rising wedges do this many times. Where the highs look to struggle, we're making higher lows, and I've seen rising wedges do this. Comes up here, comes up here, comes up here. You're so certain this thing's just going to roll over and be this huge drop to the downside, and instead it does this. Okay? It goes sideways and it blows through the tops and it just goes up, and there is no correction. And if that happens, you don't want to miss that blow off top. But when that happens, at the end of this is likely to be a nasty correction. So if by the end of the year, we're all having this conversation talking about rising wedges and where it's set up and where's my bottoms, where's my structure, where's my low, what price needs to be taken out. If it can't confirm that this market wants to go lower, I'm not trying to force a bunch of trades to the downside. It would not surprise me at all to see the market blow the top off first, go higher and stretch higher than anyone imagined it. And right now we've got S&P targets around 5,800. We're trading at 5,720 right now. I mean, we're talking about some of the biggest, brightest investment banks in the world that have done nothing but change their target all year for higher highs in the stock market. Oh, we're going to be at 4,800 this year in the S&P. Final answer. Oh, no, we'll be at 5,000, 5,400, 5,600. I mean, it might as well be an auction where it just goes to the higher bidder, because all they're doing is changing their opinion. They don't have to be right or wrong. They just have to publish content, So do I think that 6,000 is in the cards? Yeah, I think that we could have a pullback and a blow off to 6,000 plus. And then once we hit that level, then yeah, I'd be way more skeptical of a correction coming at some point. But it's probably not until we see, a price to earnings, price to peak earnings, something where the market gets really, really overstretched and really, really overvalued. And like, what else is the catalyst? Just because the market's overpriced and expensive doesn't make the market crash. Something else is going to have to break it. And just like we saw back in 2022, it was a time for deleveraging. The Fed started to raise rates. The market was instantly deleveraging, and we saw basically a healthy bull market for 9 months. 2020 was COVID, and nobody said the market was going to crash because of COVID, but there was a lot of people that were anticipating some type of correction in the market, I being one of them. And I was right, but then I was also watching a bear market turn in a month to hit all-time highs again in like 3 or 4 months. So it was just a wild and crazy move. And you never know what the market's going to do. So just saying, head on a swivel. I'm cautiously bullish. China stepping in and adding some stimulus certainly doesn't hurt. Now I wonder if some of the growth is looking elsewhere and it's not just U.S. growth. I do see the U.S. is pretty solid, pretty stable. It's still one of the strongest economies in the world. It's arguably number one. China number two, adding some stimulus. Do they have some stocks and upside? Sure, I hope so. And I'm liking the potential for those stocks to continue going higher. Okay, all right. So that's where we're at so far. SPY pulling back a little bit. I do have a let's see here, 18,000. Man, that's way down there. That was a pretty inexpensive play. But I want to see. So I'm risking about $1,700 in my account with no profit target, or I'm sorry, no profit cap. I mean, if we have like some type of scary volatility event back down to this 200 EMA, and it happens quickly enough, if I have some time left in the trade, I could turn this 950 risk into maybe $1,500 to $2,000 profit. I'm looking for something like that on profit. I'm looking to kind of alleviate some of the drawdown. But I don't know. I mean, I talked about this morning. This might be the new structure I'm looking at for the Qs. If you take these highs and you take this low, is this market from that slide in July to August 5th, are we just doing this? Is the Q just going to find a way to go like this until the election? And then you're staring at this like, oh, there's got to be a top right here, right? And then is this where the Qs actually tumble and go back down and we have sideways on the Qs? Or instead, is this where the market looks like it's got to go lower, but it ends up blowing the tops off again and going higher? I don't know. But right now, if we're not breaking the highs and not breaking the lows, all this is chop. This could go up, this could go down, this could be all over the place. I don't think the market's going to do any major structural damage to the upside or the downside right now. It's a little bit less clear on the S&P because we've made some all-time highs here over the last couple of weeks, right? If you go to the Dow, we've also made some recent all-time highs. You go to the Russell, we made an all-time high during FOMC. It was the day after. So we had FOMC that faded lower. We had a huge gap to the upside. Still hasn't broken out of the highs from July. And still, the Russell is not at the all-time highs. And so this is the one index that I can still see performing well. The daily time frame still looks pretty well supported at this 200 EMA. And I want to see if the Russell can just maintain bid. If it stays bid, great. If it comes back down to these lows, I'm still interested in looking to add some options exposure, get in some credit spreads, look to see if price will stay above these levels. And hopefully we are just going to grind back up towards all-time highs. So if the Russell hits all-time highs, awesome. Check it off the box this year, or check the box this year for a nice little milestone, because that'd be all-time highs in the SPY many times over, like 40 plus times this year. All-time highs in the Dow, all-time highs in the Nasdaq, and can the Russell return to its state of glory and catch up and actually be the little small cap stocks that make a run and hit all-time highs again? That's something to celebrate. If we get a nice little rally at 10-15%, break all-time highs on the Russell, that's pretty impressive. Right now, actually, I'd measure that incorrectly. Right now, if we get to the all-time highs, we're looking at about an 11.2% move to the highs on the Russell. So can it get there? Yeah, I hope it does. And it's pretty choppy and indecisive in here. But as we come down and test the 200 EMA, I'm looking for opportunities to buy dips. And I'm going to stick with that. Okay. All right, let's talk some other stuff here. Volatility index, we addressed. The dollar index. Dollar index is playing games with everybody. Look at all this chop here. Let's just go back and see how many changes of directions we've had. So greens to reds, literally the last like 2 weeks, total indecision on the dollar index. I told traders, like, this is a very tough environment to be a FOREX trader on the dollar index because you're not getting any clear direction. So I don't love the dollar index for anything other than if we get a pullback. I would look at like this area here as a swing high to a swing low and just look at a decent fib level. If we go from this high to this low, okay, and we pull back to the 38% or the 50% pullback zone. If these levels offer up confirmation to sell, I wouldn't mind looking to sell the dollar, looking at respective dollar crosses in Forex trading, look to sell the dollar and look to see if this is actually going to make a swing lower. Okay. So I don't like where this is at. It's playing all sorts of games with Forex traders. It's testing those lows. It's running those stops if people are trying to buy it. It's also, coming up here as a buyer and it's flipping directions. It's a very violent couple of weeks where there's no clear winner. So I'm not going to waste my energy trying to trade the dollar index when nothing seems to be happening. So I'll wait and I'll look to see if the direction gets a little bit more confirmed, a little bit clearer. But until then, I'll just look at it. It's an index. If it looks obvious, we'll talk about it. I just think there's other ways to trade the dollar by being long commodities, gold, silver, Bitcoin, the stock market, other assets that would benefit from a weaker dollar. And even if the dollar pulls back short in the short term, I'm still looking to fade that move. Okay. We have seen lower highs and lower lows since July of this year. And even a pullback here doesn't necessarily change structure, in my opinion. So I'm still looking for a weaker dollar. Oil. We're currently sitting at 68.15. Crude light around 68.19. If this $65 support level holds, that's the one level I'm watching closely. Natural gas continues to perform pretty well. This one's up off the lows by around 50%. My gosh, man. Natural gas is just doing something special. For now, it's not the easiest index to trade, or not index, but instrument to trade. On futures, I actually haven't placed a single trade in natural gas this year outside of a credit spread. I think I took a credit spread at these lows and took profit within like 30 days. That's it. I was hoping we could still revisit $1.70, $1.65 to look for the same type of trade, but hasn't happened yet. I'm not going to chase it. Gold actually had a pretty decent correction today, as did silver. Gold's down 1.19%. I was talking to traders about this morning. I do like gold for something like this. If we have a decent pullback and gold is dipping, I would expect the dollar to get stronger. So if the dollar gets stronger, doesn't surprise us that gold will weaken in the near term. But if gold comes back down to this 50 moving average, or to this 100 moving average, or even to the 200 moving average, I'm still looking at credit spread opportunities on gold to go long and just kind of establish a nice little line in the sand and see if I can get long gold. All right. So I'm just looking to see if we get pullbacks towards these moving averages. Not that complicated. So I'm just because we've dipped today, I saw a lot of traders like, Chris, I'm short gold. What do I do? I don't know. Look at your chart and figure out a profit target. I think gold has room to pull back to like 25.50, 25.25. Maybe a little bit deeper if we come back into some of these other structural levels. But, even this last breakout point was around 25.30. So, I mean, I'd like to think that a price that has gone up, I mean, even from this last move, I mean, we've gone up how many? How many points? 814 points. And we are talking about, can I get a 50-point pullback? I mean, probably. So I hope there's a little bit more of a pullback offering some chances to buy. I still like the gold play. I still want to add some exposure, but I'll probably do it through credit spreads. So I'll probably trade GC with credit spreads. Look at a couple moving averages right here. We come back and tap this level at 25.50, 25.45. That's a gold futures trade. Probably throwing a credit spread there if it's not too wide. Silver. I'd like to see silver maintain this posture above $30. Okay. If we get back below $30, I don't love that unless we immediately respond back to the upside. So we did have a nice little breakout here. We came back and retested the high. If this is just a break retest, I'd like to see if silver has more upside shorter term than actually stabilizing and going sideways. If I see silver do this, and it takes a while, I'm a little bit less excited about silver going up and going up aggressively. So I do want to keep an eye on this one. And, obviously silver and gold have been performing well this whole year. And I still think silver has a nice measure move to the upside that I'm trying to capitalize on. I can trade SI. I can trade SLV. Those are going to be my two plans. Bitcoin's down a little bit today, 3.4%. Capping off a move that had a nice rally here, 66.5 or so to the upside and pulling back a little bit. We are back and forth just above the cluster of moving averages. So here's my 200. It's pretty much going horizontal. High to low, high to low, high to low? Question mark. Are we going to see more chop on Bitcoin? Maybe. In a way, I hope we do. I wouldn't mind getting some Bitcoin trades in here in the low 50s again. MicroStrategy stalling a little bit off the highs. Ethereum, want to see if Ethereum can get back above 28.15 and start to break that trend line. Copper, decent sized pullback. I'm long copper. I'm looking to get long copper if I can get the right setup. Japanese yen, good luck. Nikkei 225, good luck. My only plan on the Nikkei is this. If we come back down to revisit this August 5th low, I'm going to get long the Nikkei with a stop loss or with a credit spread. I'll probably trade EWJ with a credit spread, or I'll just buy with a stop loss that's pretty tight if we come back down to that August 5th low. I don't know if the Nikkei is going to be able to break the highs or the lows. We might just be dealing with a lot of this, and maybe we make slightly higher highs, slightly lower lows, and the Nikkei just does this for a while, right? And there's no clear direction other than I would still buy the lows and look to see if we can get back to the highs. If not, go higher. Japanese yen. If the Nikkei is going up, the Japanese yen should get weaker. If the Nikkei is going down, the Japanese yen should get stronger. But I do want to watch that closely. I'd rather be long the Nikkei index with stops versus trading the Japanese yen in currencies. It's my least favorite currency pair to trade. We've got the German DAX up to all-time highs. We've got the FTSE sideways. So Germany's up. UK is flat. Heng Seng, this is the HI. So this is HSI is Heng Seng index for the China play. China in this last little run has been up around 27.25%. That's a crazy run for an index. And we did it in, literally like 2 or 3 weeks. If I change this to a weekly candle, this is, the gains were essentially seen in 2 weeks of trading. That's impressive. It's also wild. So again, bull flags would look a lot better. The one thing I'm noting here is we do have some nice support. We are making a low and a higher low. So even if this is a slow working channel, do we have a bull flag and go higher? Do we have a more pronounced pullback and we stay in this channel to get back up to these highs again? But that's still my profit target all the way back towards like 23,000 on the HSI. Okay, so I'll be watching that closely. Mag 7, Apple's up to 231. Amazon, ooh, nasty. Amazon has pulled back. Let me check on something here. So, you log in. That's a decent little pullback on Amazon. I've got an expiration out to November 1st. I went out of the money. I might try to lower my cost basis here if I can. That, in 3 days of trading, that might have been enough to move the needle here. Let me see if I can. See if I can grab some profit. I can reestablish positions here, but let's see. Let's go to positions. Right now, Amazon. Okay, still up like 9 grand in the core position. My 160 put is still down about $100. So, all right, let me see. Let's put a chart alarm down here around 170. We'll just see how fast. If it does drop, let me see when earnings are on Amazon. So we have earnings towards the end of the month, October 24th. Okay, so I've got it covered. So I'm essentially with a collar trade here, covered with a call, long put. So sell call, buy put, that's a collar. If price stays where it is, there's no harm, no foul. If price moves down towards my put or below my put, then I cash that in to lower my cost basis. This credit, I keep it from the sell call side, that cover call, and then I can work my cost basis lower. So I'll keep an eye on Amazon. I still like this stock to the upside. There's nothing that's really going to change that right now. I'm pretty happy with the stock overall. All right. Anyway, just checking some of the Mag 7 stuff. Google trading at 165. I have some 165s by 160s. Have some bull put spreads there. We could be putting in a bit of a bottom. So from this high to this low, if this is setting up for some type of head and shoulders pattern, something like that, we base here, build a shoulder, and we break above and try to get to all-time highs. I could see that range, establishing a high for the year, a low for the year, and then price either finishes halfway in between, or maybe the idea is we form this low, we come back up and retest the high, and we just have a bigger range. I think the one thing that most people aren't planning for is, what if the market goes sideways for 6 to 12 months? right? What if this market in a 10 to 20% area is at the highs that have been hit and won't be touched for a while, and we have lows that are hit and won't be touched for a while, and then we just have to survive without seeing price really do anything, going higher or lower. That's an environment that probably most people aren't used to, because all we've had since 2018 has been swings and ups and downs and bull markets and bear markets and busts and bubbles. So it's been a wild market, but sideways is certainly a behavior the market can give us. Meta up to all-time highs. I do have actually, what is this one? It's a 111 trade on Meta. I collected $1.80. I'm willing to own some of the shares, but unlikely that they get assigned unless something bad were to happen. Also, it's well below this daily 200 EMA, so the likelihood of getting assigned is pretty slim. If price came all the way back down to below the 200 EMA, I have a trap here for about a $500 profit, and then I still have my credit. That's kind of the sweet spot where I can make $680 if price finishes basically in this yellow box. So that's the trade on Meta. Microsoft, no trade for right now. I don't know if this is kind of the same situation where we have a high, we have a low, we have some indecision in here that we're just kind of navigating, but high might be in, low might be in, and the market's not doing much of anything. Let me take a quick peek at ES again, just to make sure my profit trap is still in good shape. 1, 2, 3. Yep. So I should be okay. We've got about 17 minutes before closing bell. I'm noticing the credit here for about 20 cents. You see if I can grab 20 cents and grab an extra credit there. 20 cents. Survey says, come on. Replace. I'm going to try to go a little bit more. I'll go 25 again. All right, I'm trying to get a little extra credit out of the ES trade. So spot checking this. If this goes up by about 10 points or so, this might get into my profit trap zone here. This doesn't technically expire until 5 p.m., but usually for me, I don't like that maintenance window. I like to be out of the trade by closing bell. So in the next maybe 10 to 15 minutes, I'll hopefully closing this thing out for like 20 to 25 cents extra credit, which gives me a net win of about $2.95 or maybe $3. If I get 25 cents with my profit target here, then I'll give me $3 of net credit. Not bad. Netflix. 707 sitting at these highs. I have a 111 in Netflix. I do like this trade. Nvidia, I closed out for a small loss today in Nvidia. I got in for basically a reverse iron condor. I was looking to see if I could, buy and then sell. So I did 2 debit spreads. I just got filled for 25 cents. All right, very cool. Okay, so that trade's done. I'm going to update that in my trade alert section for A1 trading. This is a futures trade. Yes, right here, update and reply. ES 930 expiration, 275 credit entry, 25 credit close. My pending limit credit for 25 cents was hit, giving me a small bonus for a net credit of $3 per contract. So not bad right there. All right, so that trade closed out for profit. Not too shabby. I'm curious. Oh, that trade's done. So I just want to keep an eye on this one for similar. Well, it's over. I wondered if I can kind of continue to watch this as the market is coming to a close to see if that profit trap would get just a little bit bigger. There's a chance that it would get bigger, but also there's that off chance that the market rips up another 5 or 10 points and all of a sudden puts me in jeopardy. So I'm happy that the trade is closed and less to worry about. All right, what else we have here? Tesla up to 259. Expecting some indecision on Tesla. This is another stock that I was looking for. Let me see. I do have some exposure on Tesla. I obviously want to, put in some trades at the lows. So for Tesla, I have a 115. That is a naked put at 115. I've got a bull put spread with the 115. I've got a 75 with the long puts. Let me just go into one individual count here. Let me just kind of dissect this. So I've got a 130 by 115. That's a ratio spread right here. So I'm willing to take on the shares at 115. I would get a $15 bonus because of the bear put spread, and then I take the shares off. I don't know what this or when this was taken, but if I go into my history here and look at Tesla, history, Tesla, this ratio spread, let's go out year to date. Looking for my expiration. This is December 20th. Okay. So December 20th is the expiration. And I just saw it a second ago. Here we go. So the 115 put right there. And the 130. So what did I collect on the trade? Looks like I bought it for $636 and sold it for around $1,300. So it should be like a $6 or $7 income play. So if I have 560 plus 758 minus 636, so $682 income play if Tesla is above 130 by expiration in December, which I would imagine it's probably going to be there. I've got, I mean, 130 is way down here. We'd have to completely break structure on Tesla. This also looks like a bull pattern. This could be a nice head and shoulders pattern. If we do break above this level, I think Tesla has all the potential in the world to be a runner towards 400. As far as a Mag 7 goes, or, it was Fang Man or Fang T Man or whatever you want to call it, I don't know if Tesla is considered in the Mag 7 anymore. Maybe it is, maybe it isn't. Tesla was one of the stocks that was beat up so badly this year. Same thing with Apple, and they came roaring back to the upside. So in impressive fashion, I mean they've caught up, right? For year to date, Tesla is up on the year. Let me see what they're looking at. So go to the one. Let's see. Let's go up 3 months. So today is the last day of September. So for the year, I mean, this is kind of wild. This is January of this year, and Tesla for the year is actually clinging to positive. But the wild thing is this stock was down around 40% at the start of the year, and even worse than that was the high that we had back in late 2023. This would have been summer 2023, making lower highs and lower lows. But to be a 40+% drawdown and then come roaring back to about an 80 to 90% rip, that's impressive. Obviously, it's volatile, as most traders have experienced in Tesla. But what I see structure-wise is if we get a fresh break above these wedge highs, which to me would be, we'd have to be above like $300, and then I'd be more willing to say like, yeah, I think Tesla has some opportunity to continue to rip, and even targeting the highs at 400, 410 would be good. Okay. Let's keep asking about China's economic policy. All I know is that they're doing stimulus to the biggest degree that they've we haven't seen China do any real stimulus since COVID. And I know there's still skeptics of like, well, they say they're going to do it, but will they do it? But the markets are already priced it in like it's coming, or it's going to come, or it's still coming. And they've been pretty explicit, like this is kind of step one, and there's still like 2 to 3 times the amount of stimulus that could be entered in the market. So the easiest way to summarize it is this is called lifting animal spirits, and China's doing it in a big way, and the stocks are resilient to that. The tech sector as well, the real estate sector in China, all these things are, we're in desperate need of growth, and China's been underperforming for over a year and a half, if not 2 years. I mean, since the market in the U.S. recovered late 2022, it's been a pretty steady bull market ever since, and China's been completely not. India's been up, Europe's been up, U.S. is up, Japan is up, China's not, you know. So the announcement, arguably couldn't have come at a better time as far as, look, the Fed just cut, China started to add a package to go with it. That's, world number one, world number two, both getting more and more dovish, accommodative, I'd say is probably the proper word for it, but getting more accommodative to monetary policy with fiscal policy to go with it. So those are two big things to add money to the system, adding liquidity to the markets, and seeing the stock markets take advantage of it and lifting off and celebrating it. So I like the China play for the next 1 to 3 months. I don't know how much further I'd be willing to go outside of maybe like Q1 of next year. But if we get a big boost in China's runs this year to the end of this year through our election in the US out to the end of the year, I'm pretty happy just taking some profit. By the way, just real quick, I mean, this, I'm looking at the last few minutes here. I mean, talk about some freaking late day cycling. I mean, the market did essentially nothing the entire day. And then over the last 20 minutes, this thing is up about 3.5 points on the S&P. That's not nothing. I mean, you look at the SPX today. Oops, let's go to this chart here. Look at the SPX. This thing has gone from today's low to this current high. We're up about 54 points in the last, less than 2 hours. That's pretty impressive for a very quiet day, and just we're coming right back to where? Probably these highs and just kind of fudging around here at these tops and bottoms and struggling to make highs. But September kind of finishing on a positive note, back up towards these all-time highs. October is obviously a new month. We have non-farm payroll ahead. There's not a lot of data this week, but we do have some PMI numbers for the manufacturing and services side that will be important to watch. I think the real thing is going to be non-farm on Friday. Whether it's a big market mover for the day, it certainly matters with the narrative of what is the Fed going to do in November. Between employment, inflation, it's going to basically give the Fed the ammunition to cut more, or the ammunition to change their tune and all of a sudden not cut as aggressively. And who knows how the market's going to react to that. So I do think the market is under the surface, like bubbling with a lot of errors, but it just seems to have blinders on. Nothing can stop it. It's buy the dip, sell the rip. But just expect some volatility going into the election. I expect some indecision. We're probably going to get it. I think the market's going to have a hard time breaking all-time highs. I don't think necessarily going to front run the election. I think the market's going to just do what it does and just oscillate, chop around, and then we'll just see how the price action comes in day to day, week to week. Okay. All right. So pretty interesting, end of the day though. This was a low around 2:20 in the afternoon, and here we are just 6 minutes before the close, and we're up around 54 points. Like, that's a pretty impressive turnaround for a late day move. Not enough to break the highs from last week, which was Friday and Thursday, and those would be the all-time highs that we just saw recently on the SPX. But tomorrow's a new day, so we'll go from there. All right. What else? Oil we talked about, gold, silver we talked about, Bitcoin we talked about, Mag 7 we talked about. Bonds are down slightly. The 1 to 3 year, 7 to 10 year, 20 year, all down. Yields are up actually. The 2 year is what is being late. Let me change this back to SPX. The 2 year is what is supposedly the Fed's target rate. So the 2 year has been dropping hard from 5.26. We're dropping down to about 3.64. Is the bond market, have the yields been front running? Buy the rumor, sell the news that the Fed is cutting. It may have already been priced in. There may be more to go in the 2 year side to the downside, but I do wonder if the 10 year right here, if the 10 year is going to start going up. In fact, since the Fed actually cut on the 18th, the 10 year yield has actually gone up, which is probably a little bit counterintuitive for most traders, because you think the Fed's going to cut, they're going to keep cutting. It's got to bring yields lower. I actually took I'm happy I'm out of the trade. I don't have the TLT trade on anymore. I was looking to get back to symmetry, so I was long at 82, and I was looking to take it up towards 105. We ran up into the 100 and 101 level, and by the time we dipped back to like 99, I was closing out of the trade for a win. Not a huge win. I was up like $2,000 for a couple, each account. So like, I don't know, maybe $15,000, $16,000. But I don't want to sit on it because it was an expiration to January of 2025. If I go out to January 2026, maybe. But at this point, I think I'd rather just trade more gold and just kind of scratch the whole bond narrative of like, TLT is going to go up. It's like, yeah, maybe it is, but I'd rather trade gold. I think gold has more upside. I think silver has more upside. I don't want to deal with any type of drama in the bond market. If the Fed has a failed auction, for example, there could be a lot more volatility that I'm not really wanting to trade or getting exposure to. So anyway, that's where we're at. What else? Russell versus the Nasdaq. This should be. So the reason this is up, I'm actually curious. I feel like this is the. I think the Nasdaq has slightly underperformed the Russell, and therefore this is up. If I go IWM plus QQQ, if this is up, that means that the small caps have been outperforming the large cap tech. So I do want to keep an eye on that one for some type of correlation. We've got some currency futures. Palladium dropping. I'm glad I didn't decide to take the bait and drop a trade into that. I'm looking for a credit spread at the lows. Platinum, similar. Looking to see if I come back in these yellow zones. This one's corn. Didn't hit my chart alarm at the low. Soybean, same thing. Soybean off the lows, but I'm trying to get back in this yellow box. Cocoa, just keeping an eye on this one for maybe some support around this 69.75 zone. Actually, I'll set a chart alarm here around 7,000. Maybe take a little trade on cocoa futures if I get a test of that chart alarm. Junk bonds. This is the AAA, BBB, CCC expressed as Bloomberg High Yield Bond ETF. If this is going lower, this shows that credit spreads are widening. There's a little bit of lighter liquidity in the markets. I don't see that right now. Advanced decline line is pretty solid. Credit spreads seem pretty tight. We've got M2 global money supply going up. If I look at global money supply right here, we're making higher highs. So this is the US, this is China. When global money supply is up, the NASDAQ tends to follow. When global money supply is up, Bitcoin tends to follow. Gold is up as well. I mean, it's a liftoff for a lot of things. Like all things investments, all things assets, they tend to do pretty well when money supply is up. So this is a reflection of that with money supply going in, finding its way into the system. I would say JNK is likely going to continue to drift higher, trend higher. This is job numbers here, initial jobless claims, continuing jobless claims. If you want to track the employment situation in the U.S., you got to watch those. China, mix on the day. Last week, this was ridiculous. I had a lot of screenshots here in my Telegram channel. I posted a couple that were just straight snapshots from the market. Look at this one. Hang Seng up 4.16, Alibaba up 10%, Baidu up 9%, FXI 8%, KWeb 11.5%. Crazy, right? Just it was nuts how aggressive those stocks were last week. Today, HSI is still up 2.43% with a big gap to the upside, but it faded a little bit. It's still up 2.5%. That's pretty impressive. Alibaba up 1.05, Baidu up 0.14, FXI down 1.3, KWeb 0.15. MCHI, that's a basically world index with China. It's flat today at minus 0.20. JD has given some back. We're at 40. We had a rip up here towards like 42. I still have a measured move on JD. Let me see if that is fair market value. I think JD should be able to go to like 50s. Let me check here. Closing bell. Closing bell. Oh man, we got some NVIDIA puts being bought today. Meta puts being bought today. Coinbase puts being bought today. So NVIDIA at the close. Okay. Interested in some short-term stuff, but yeah, that's a big strike out to October 24th. Let's go to JD, and then I think I'll start wrapping up for the sesh. So checks a lot of boxes. We're still kind of in this value zone, price to earnings, price to sales. It's China. That's about the only risk, but technically and fundamentally, it's pretty darn good. Fair value up to 61, so I'm not going to bail on this trade. I bought a tranche at 32.50. $60 would be freaking sweet. I'm going to try to get this thing up to $55 before I want to jump out of it. Obviously, a pullback is understandable, and we will see if we get a, maybe a channel like this, but it looks like just a bull flag. If we rip up here and we pause, a bull flag to me is more upside. Start chewing into these inefficiencies here. Previous highs, a lot of clusters all the way back here towards 60 to 65. I'd be happy if I get JD.com up to $55 or $60. You're going to get a big smile out of me because I have lots of exposure, ratio spreads, bull put spreads, naked puts, all sorts of stuff. So it's a combination of income plus own shares, and hopefully that translates into a nice chunk of profit. But certainly different than last week when it could do no wrong. We're at least showing a bit of a reality check here. So I do want to monitor those Chinese positions this week. And we'll obviously see that tomorrow's a new day. It's a new month. Kickoff October 1st. Data that comes out tomorrow is going to include CPI out of the Eurozone, manufacturing PMI to the U.S. at 10 a.m., JOLTS job openings for the U.S. as well. See if that moves the market at all, or if it's just kind of a lull type week and things are pretty quiet to kick off the month. And non-farm is really the big deal. But we do have PMI numbers, manufacturing on Tuesday, services on Thursday, non-farm payroll with unemployment rate. This is probably going to be what the market's most sensitive to on Friday during that announcement at 8:30 a.m. So expect some, pre-market movement going into Friday this week, and we'll see what we get. So, all right, everybody, I'm going to let you go for Monday, wrap up the final hour here. If you do me a favor, if you're watching here on YouTube, hit the thumbs up button for me. That always helps. Leave me a comment. If you had fun watching the session, if it helps, I answered your questions. That's what I'm here for. And keep the comments and engagement coming in. That certainly helps, poke around the algorithm to make YouTube pop up our video on the right-hand side when people are searching. If you're looking for trading, education, investment, live sessions, analysis, so on and so forth, not a bad place to be. So coming into the old final hour. All right, I'll let you go for today. Happy Monday. I'll see you all tomorrow. Daily Profit Flame members, I'll see you in the morning. If you're with me in the trading session for A1 trading in my alerts, I'll see you there at 10:15. And then here tomorrow for a final hour session, again at 3 p.m. Eastern Time. All right, take care, everybody. Have a good night. See you tomorrow. Bye.